There is one stock that is particularly interesting, and it is not the next Netflix. It is better. It is the next FUBO. I do believe this is one of those stocks that has multiple X, up to 50X probably, in the next 5 years of potential. I have gathered a lot of information inside this video, so watch till the end. This information will leave you no doubt that this is a must-have one. Take your seats. Ready? Go! Hello, this is Fine Finance. My name is Alex, and I'm sharing shares. How I make money on stocks. Each week I'm sharing stocks. I know it's too early to say that video worth a like, but please, if you click the like right now so you don't forget it later, I promise that you will like this video, especially if you're looking for a growth stock. Thank you. Don't forget to subscribe. In such video, I put the navigation so you can easily find the part that you are most interested in. Here's how we are going to uncover this stock. First, I'm going to talk about unique business model. Then, fine financials. Number 3, we're going to talk about user engagement. Number 4, about potential growth. 5, hidden secret sauce of FUBO. And finally, I will share with you how I do invest in such volatile stock if I miss the first opportunity to buy. First, unique business model. I doubt that this is the first video you see about FUBO TV, but I highly recommend you watching this section until the end, even though if you saw and you know what the business model is about, there might be something that you missed before. I will show you my personal experience with FUBO TV, then I will go into details how they earn money, and in the end, I will share with you a killing feature they are building. FUBO TV is a streaming service platform where you can watch live sports events, news, movies, series. All in all, it replaces for an average American the cable that you traditionally had at your home. Nothing unique about it at this point, right? You probably say that it looks like another Netflix, Amazon Prime Video, Apple TV, Crave TV, if you're in Canada, or even worse, Xiaomi. Xiaomi was a streaming service launched by telecommunication company Rogers. Xiaomi does not exist anymore. So why with so many competitors, FUBO TV has something special to offer? FUBO TV is the world's only sports-focused live TV streaming service, with top leagues and teams, plus popular shows, movies and news for the entire household. You can watch 100 plus live TV channels, thousands of on-demand titles and more on your TV, phone, tablet, computer and other devices. I tried to look at it for myself, so I subscribed to FUBO TV. It took me only a few minutes, and here's what I saw. Subscription process was pretty easy. Once I got in, I actually was expected kind of to see more of the content there. It looked some content with the same thumbnails, so it looked to me like they didn't have enough content to show. That's why they show the same thing twice. There's a pretty big list of movies here, although they're pretty old to my mind, but yeah, you have some choice here. There are some good movies there. If you want to look something live, if I understand, it disappears later, so you have the option to record it for you, and it comes with a 3 hours of recording with your basic subscription package. But after that, you can purchase an add-on, which is around $10. With this add-on, you can basically fulfill all your needs regarding recording live events. So all in all, I can say that the overall feeling I have so far, there is an effort that needs to be done in terms of user experience, in terms of design. It is functional, it works right now, but if you want to scale to millions, you have to work on your design and user experience. So all in all, I was a bit disappointed. I think it was more about design and overall apprehension of the platform. Other services that exist today are more appealing to me. But of course, if talking about sports, well, this is number one. The sports market, in general, it's pretty big one. So you have different segments there, right? And if you are talking, we will see some numbers later on. But if you are talking about betting, if we are talking about gaming, if we are talking about sports streaming, those are different markets, but overall they touch the same person. So if you can combine everything in one, bingo. So there is one thing that makes a big difference though: sports. I tried other sports streaming services and it is nothing like FUBO. And of course, big thing here is you can record a game, for example a game of soccer. Not all people can be there when the match starts. A real big thing to have the possibility to record it and to start watching from the beginning. At the end, it's not only about the score that you're watching the game, it's also about this emotion that you have inside when you're watching this. Your adrenaline rises. Final score is not interesting at all, really, unless you do this. And here we are getting to the main part, betting. Recent purchases show that FUBO has much bigger goals than just a streaming service. Betting. I did bet in my life while watching a soccer game with my friends, and it's much more fun this way. You have a stake in it. The game means even more to you right now at this point, because this was the feeling of adrenaline that rises. It is like adding topping to your ice cream. It is better with them. I will get to the numbers later, but for now, just think how many services do you know where you can watch your favorite sport and bet directly in this application. I know zero, so if you know more, write to me in the comments down below, please. How powerful that is to have everything in one place together. If you want to bet when you're watching a game, you just have to press that one button and you got it. You're in it. It's easy. And that's the thing. Here is the press release about recent acquisitions, and it has executed a binding letter of intent to acquire sports betting and interactive gaming company Victory, and expects to launch a sport book before the end of the year. Victory, which sounds like victory, but it's a victory. So Victory has been in discussions for market access agreements in the eastern part of the United States and currently has a deal secured in Iowa through Casino Queen. FUBO TV intends to leverage Victory's sportsbook platform and digital gaming assets and its consumer-driven betting technology to develop a frictionless betting experience for FUBO's customers. I can give you first number since it's in a press release. This industry, according to Xeon Market Research estimates, will become a 155 billion industry by 2024, so in about 3 years from now. Throughout its December 2020 acquisitions of Balto Sports and its content automation software, FUBO TV intends to launch a free-to-play gaming experience this summer. How beautiful is this? FUBO leverages all sports-related activities. So in the future, FUBO and sports might have close annotations. Again, this press release has a lot of good things in it about the future of FUBO TV. It's all about fan engagement. This is why I think Netflix we can use here only to see how high similar service can go in the market cap, but other than that, FUBO TV has its own meaning. So to summarize this first part, FUBO equals sports. Everything about sports, life, gaming, betting. In addition to this, you get your series, news, 100 plus channels in total, and also you have movies in here. 2. Fine financials. Time to look at their financial health. FUBO TV has a market cap around $2.5 billion. Honestly, their financials look bad. Current ratio is only 0.28. Just to remind you that a good current ratio, which means that short-term assets are greater than short-term liabilities. So a good current ratio is always more than 1. Usually I do not even look if a company has a current ratio lower than 1, but in this case I made an exception just because of the unique business model they have and how high it can go. But more details later on. I admit this is a big if, having such a low current ratio. Let's look at their income. They really started to have some income a year ago in 2019, $4 million and 111 million in 2020. So the income growth is phenomenal. I know this is not a big one, but for a brand new company, this is quite a lot. In this case, the part should be called not fine finance, but bad finance. Looking at EBITDA, earnings before interest, taxes, depreciation, and amortization. Basically, this is the main parameter that shows how company does. It is negative $473 million. Hey, that hurts. That is 4 times more than the income in 2020. Looking closer, however, we see that the impairment of capital assets is the biggest, $320 million, which is around 65% of total expenses. So what does this impairment of capital asset mean? Impairment occurs when a business asset suffers from a depreciation in fair market value. In other words, this is related to depreciation of assets and also something that is not directly related to day-to-day business, also known as operational expenses. This is a fictional loss that is allowed in the US to post against income. Fictional because of the company does not take money out, but if it sold these assets, it would lose this amount. In the meanwhile, those assets still work and bring income. Honestly, in this case, I didn't find exactly what those assets are, so if you know, please write to me in the comments below. Thank you. Why this is important? Well, this is biggest factor why the current ratio is so low. If we take it out, it would look like the current ratio is much closer to 1. Again, I did not try to say that this company has no financial issues, but those issues should be put in perspective. Quick look at their balance sheet. There is no data about the crucial year, which is 2020, so it doesn't really make sense to analyze the balance sheet, but I still needed to show you real quick. We see that for 2019 total assets are largely bigger than total liabilities. Even though their financials leave me with more questions than answers, I would like to see one key parameter for a growth stock like this: number of paid subscribers. 3. User engagement. Number of paid subscribers more than doubled in 2 years. We also see the acceleration of growth. The growth in 2020 could be as well explained by a stay-at-home situation. Some of you might say that for 2020 this is not a big growth, taking into account the situation. Probably you're right, but we will never know this. The fact that the base of paid subscribers grew 58% in 2020 remains still an extraordinary situation. Better again, the average revenue per user grew quite a lot, from $39 till $67 in 2 years, which is 72%. This also shows that the platform was greatly improved during those last 2 years. This growth was driven by continued subscriber expansion, an increase in subscription average revenue per user, and growth in advertising sales. Subscription revenue increased by 64% year over year to $53 million. Advertising revenue increased 153% year over year to $7 million. Total content hours streamed by FUBO TV users, paid and free trials, in the quarter increased by 83% year over year to 133 million hours. Quick calculations. On average, if one user watches 133 million divided by number of users, 455k, so we get to 292 hours per user per year. This is 5 hours per week. Pretty good or not? I don't know. Let's look at the average hours spent for TV, for example, in the US. So here we go. Here is the breakdown by ages. So from 12 to 17 years, you see that TV connected devices are more than 1 hour per day, and traditional TV is around 1 hour. For the next group, you see 1 hour 34 minutes per day, and if we go higher in the age, we see that the number of traditional TV increases significantly. And for a 65 plus group, it's more than 6 hours per day. Well, it can be explained because, well, you don't work at this age anymore. But anyway, all in all, according to the Nielsen company, the average American watches more than 4 hours of TV each day, or 24 hours a week. FUBO is only 5 hours a week. As I said, after the business model review and my personal experience, there is a lot to be done still. This is not the best streaming platform as of yet in general, but this is probably the best sports streaming service today. Sports fans, do you know other streaming services related to sports which are better than FUBO TV? If you do, please write me in the comments down below. Thank you. And here are fresh Q4 unaudited results. So in last quarter, total revenue is expected to be between $94 to $98 million, a 77 to 84% increase year over year. Prior guidance for this period was $80 to $85 million, so this is substantially more than it was expected. Paid subscribers at the year end are expected to exceed 545k subscribers, an increase of more than 72% again year over year, and prior guidance was 500 to 510,000 subscribers. 4. Future growth. How far can it go? This is the first question I'm asking myself when watching a stock. The first obvious comparison is with Netflix. The Netflix market cap is around $220 billion. And well, FUBO is at around 2.5, which leads us a gap of 100x. It means FUBO is only 1% of the Netflix market cap. I'm not saying that one day FUBO will have the Netflix market cap, probably, but well, with these conditions, most likely that it can do at least 10x growth. Right now, FUBO actively expanding internationally. Even though their head office is in New York, they do aim for a Spanish market a lot. And when I say Spanish, I mean Spanish-speaking customers. Just to remind you that Spanish is the second most speaking language in the world. What about some statistics about cord cutting and how much of those who watch TV will likely to switch to stream? So Nielsen audience stats published in February 2020, almost a year ago from now, reveals that streaming accounts for 19% of television watching in the US. Of streaming hours, Netflix claims the biggest share, 31%, or 6% of the total television time. This is ahead of YouTube with 21%, 12% for Hulu, and 8% for Amazon Prime. I read this as 81% of the potential market still uses traditional TV. Even with that, there is a room to grow for the whole streaming services market. If you think that Netflix has gone too far with this amount of subscribers, see this. Even Netflix can grow its paid subscribers base several times, even though they already have 177 million subs worldwide. Here is another graph showing that about a third of customers are using both cable and streaming. Those numbers are different depending on the source, but it gives the overall understanding that there is a room to grow for the market in general. This means that the market in general will grow a lot for upcoming years. If FUBO TV stays there, number one in the sports segment, well, chances are high that they will be not too far from that $100 billion valuation one day. Again, FUBO TV is not only aiming to be a streaming service, but also a betting platform, which is a big add-on to the segment. The question now is, can they do it? And who are they? 5. Secret sauce of FUBO. The biggest asset of FUBO TV has is their team. Those are people who are building all the services. Let's take a quick look here. All the team is heavily skilled and has a huge experience in the field, starting with CEO and co-founder David Gendler. And David has been named among Goldman Sachs' 100 most intriguing entrepreneurs a year ago, 2019. Varieties Dealmakers 2020-2019 and Broadcasting and Cables Power 100 in 2017. Now, CTO is the person who is responsible for the technology. This is very important person in the company, in the IT company like this. So Geir Magnusson Jr., if I'm reading correctly, is the CTO of FUBO. In July 2018, FUBO TV became the first virtual MVPD to launch 4K HDR beta. And what's interesting, it was ahead of rivals owned by media and technology giants such as AT&T, Alphabet, Dish Network, and Sony. So FUBO TV officially launched dynamic ad insertion ahead of Hulu and Live TV and YouTube TV. Magnusson brings 3 decades of experience leading product and engineering for some of the US largest software companies and hot tech startups. This person looks like to be real skilled, and with having all that experience, it's really a big asset. Another person I want to stand out is executive chairman. So Edgar Bronfman Jr. He's the former chairman and CEO of Warner Music, one of the world's largest music companies. During Bronfman's tenure, Warner Music Group was named one of the Fortune magazine's most admired companies in 2007. The first music company ever to receive the honor, and in 2009 was recognized as one of the world's 50 most innovative companies by Fast Company magazine. Looks pretty good to me, huh? Well, it looks like the team knows what it's doing. There are a lot of other team players that I did not mention here, but in general, they know what they're doing. It comes as no surprise the suite of acquisition and partnership that was done in 2020. All this action will allow to grow faster. Acquisitions that will open more doors to grow quicker for FUBO. Whether it's a betting technology, access to new corporate content, or original content creation, etc. They're not there yet. Okay, 6. I just want to share with you how I invest in such a volatile stock, which is pretty interesting, but I don't want to buy really high, and I need to understand when it will not go lower. Again, we discuss everything about this in the Discord group. That's why I encourage you to join our community of investors, where you can see also the setups, and we discover FUBO in particular, but many other stocks as well there. So when at first a friend told me about this stock, and I saw this went up already quite a lot, but he actually kept telling me about it even earlier when the price was around $20. And yeah, I just didn't have time to listen to him and to go and to analyze this stock, but I really saw it after the price was already at $50. Of course, I didn't buy at that time because it was on the higher leg. And so just want to share with you how I approach this kind of stocks. Of course, in this particular situation, I use charts to help myself to understand whether it's overbought, whether some indicators showing that it's not the time to buy. It doesn't always work with growth stocks, like for example, with Tesla, we would not work. But in this particular case, it just looks like there was some kind of a news of event that boosted the growth. I think it was probably because Multifold at some point around $30, they said, okay, this is the stock and we think it's worth 60. And it just skyrocketed from there. Of course, when it hit 60, it started to crash down, and that's where I started to look closer to it. So my first buy, just to share a real quick story, my first buy was after 2 or 3 days crashing down. It was around $44, just a real small position, around 10% of my intended position that I fixed for myself, that, okay, I expect this stock to be, okay, let's grow, let's say in next 5 years to 20x, 30x. So in my mind, I want to have this amount of money. I'm not sure if it's really the amount of money interesting to you. I'm trying to explain, because for each person it might be different amount, right? It can be 5,000, it can be 50 or 500,000. Doesn't matter. But what I'm trying to say that I figure out for myself what position, what amount of money I want to invest. And I start to invest with 10%. Just if it goes really high after that, which I doubt, but anyway. So I'm not saying, I missed this opportunity entirely. That is why. So it was first around $44, and then it was around $37 again, and I just another 10%. And then I waited. I looked at the next resistance level, and it was around 20, 24, 25 by there. And well, I got lucky because I was at that time there when the day when it dips 23.3. It was really the bottom. You will not see even on the daily chart right now. So at that point in time, I saw it was a good resistance level. I saw it was a good price. It was already from 60 to 23, and I also buy it in my TFSA account, which for Canadians, you know what that means. No tax if you hold it for more than a year. At this point, I bought 20%, because it could fall to even lower, to $15. And honestly, I was expecting it to go lower, but it didn't happen, at least as of yet. So it went up the next day. It went up like 30%, something like that. So I was really lucky to buy that part, but I could buy more, of course. But that is why you invest in chunks by a longer period in time. Okay, so short story long, I have all this documented in my signals group. So if you want to join and be in the part of the first 25 people, which will be free, just write me in the Discord. Again, just join my Discord group. I put the link down below, and write me that you want to see those signals. I will put you there, no cost for you, nothing. If you have some interesting stock to share, feel free. Favor for another favor, right? Anyway, just to finish the story, I did buy at 27, and recently, as of I think, yeah, it was this morning, I bought at 31 because it was again the level. I could have bought at 40 if I didn't know if those setups and didn't see those signals, but I didn't buy at 40. I waited because I see the technical analysis that helps in this case. If you want, even if you buy long term, really, you would prefer to buy at 31 rather than at 40, of course. So this is my short story about how I'm buying volatile stock like this. If you want to support this channel and myself, you have link to Patreon. I hope this video was not too boring for you. I really appreciate you being here till the end. So feel free to write me in the comments, or better, join our Discord group. See you soon, investors. Bye.